How then would you, clients and investors, evaluate the risk-reward as it applies to China, given all the challenges that you just touched on now?
Well, China has emerged as the second world power, representing almost 20% of GDP, with the US around 25%. So it's an incredibly important place. You can't ignore it. You have to do business there. And even if you decide not to do business there, you need to understand what's going on, because what's happening in China influences every industry around the world. So I think that there's a set of opportunities here that clients are looking at and investing in. And despite the sentiment that we hear sometimes, we see a lot of companies actually investing, whether it's Starbucks opening branches, opening locations, McDonald's. We see research and development centers being opened. There's a lot of technology staff here, innovation. So we see, despite the rhetoric, a lot of international companies investing in China.
Despite the rhetoric, but also despite investor sentiment going somewhat cold, and a rather extreme expression of that is the notion that China is uninvestable. Would you agree? Is that an extreme position?
Well, there's no doubt that FDI has reduced in 23, but you have to put that into context. It was increasing for the last 15 years. So every market will take its pause, and obviously the last few years have been more difficult. But I think investors are encouraged by the early signs, and you've seen that in some of the recovery of the Chinese and Hong Kong stock exchange. The growth in Q1 came in above 5%, and we see good export activity, good industrial activity, but the growth is still a bit imbalanced, and the numbers are not always consistent. So I think investors are looking for more evidence to see that the Chinese recovery is ongoing and persistent.
That was my next question. How would you describe China's overall economic outlook? It continues to be, it seems, on a deflationary leg lower, facing perhaps a period of Japan-style stagnation, or is there a meaningful recovery occurring?
We think so. I think when you are 20% of the world's GDP, growing at 5% is no small feat, and that's what's happening. And China is making fantastic products, has a lot of innovation going on. So I think that they have a lot to sell to the world, and that product will be needed all over the world. So I think that there is a lot of opportunity in China, both for clients coming in and also for Chinese companies diversifying away from China and growing their client base.
But from a portfolio inflows point of view, it seems, and the feedback that we're getting from a lot of investors is, look, Beijing needs to be bolder with stimulus. Beijing needs to target the consumer. That is so important in terms of this transition. Is that the way that we should be framing this discussion?
I think the government has taken a number of actions over the last few weeks and even last week to support some of the sectors that need that. Real estate's been a big focus, and someone described the actions taken last week as a parachute. It won't really solve the issue immediately, but it will help soften the landing. And that's an important sentiment driver for Chinese consumers who have a lot of real estate. So we think if that bottoms out, then the recovery we've seen in sentiment will probably persist.
How do you feel about the evolution and the reforms of China's capital markets? Because we had the bond inclusion, China government bonds now included in 3 global indices, and that's promoted inflows. What more needs to be done, Sjoerd?
China houses the second largest capital markets in the world after the US. In fact, all of Asia has the second, third, fourth, and fifth largest capital market. So it is a place where investors can put their money to work and increasingly want to put their money to work. I think some of the initiatives have been taken to connect Hong Kong with the A shares, the inclusion in the indices, I think has really brought the opportunity for clients to invest. But first and foremost, they need to decide they want to invest. And we have seen some early inflows in the last quarter, but we hope to see more of it.